Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Well, this has been a crazy week in the markets. Yesterday, the Dow fell over 600 points, and the media was blaming on it. Or CNBC was saying it had to do with the trading in GameStop, which has gone from $3 to over $400 briefly yesterday and is down a little bit today. One of the craziest moves I've ever seen.
What is GameStop?
Well, it's a chain in the United States that sells video games, computer games, and so forth. I last went in one myself about 10 years ago, but it's on hard times, like a lot of retail chains in the United States. Not simply because of the shutdowns, though, but because when it comes to these console games, many people, younger people, aren't going in the stores and buying them. They're going to Walmart, or they're just playing these games on clouds and so forth. So the chain itself, sort of like Blockbuster, is sort of becoming obsolete. And a friend of mine told me they went in one a year ago, and it was completely empty, devoid of customers. So what has happened is, over the past year, many institutional investors, and I'm sure others, built up a big short position in the stock. And this year, the stock has been soaring because those shorts have been forced to cover, evidently thanks to buy recommendations emanating from a message board on Reddit that has 4 million members on it. I'm looking at the board now. And other stocks that are in a similar position have also had similar crazy moves up in the past couple of days. So, for example, Koss Corporation, another retailer in trouble, was $1 in November, and yesterday it went up 480% in a single day to touch $69. AMC Entertainment, the movie chain that's in financial difficulty, was trading under $2 January the 1st. Yesterday it hit 20, up 300% in a day. So what seems to have emanated on this Reddit message board, the idea of let's buy stocks that have big short positions, and if enough people do it, we'll squeeze the shorts. That's spilled over into other stocks and become something of a mania in itself. And several hedge funds that were heavily short this GameStop suffered massive losses. One of them became on the verge of insolvency and received a $2 billion bailout on Monday and Tuesday from another hedge fund owned by or controlled by the man that owns the New York Mets. And yesterday, Mets fans were worried that he might become under so much financial difficulty that he wouldn't be able to enter the free agent market for the Mets baseball team, and they're pestering him with questions at a press conference. But he assured him that he is under no financial difficulties, and I have no reason to doubt it. But on CNBC last night and other financial outlets, a lot of the drop in the Dow and the broad market was attributed to this big short squeeze in these stocks causing large institutional investors and other hedge funds to liquidate other positions. And there was actually a spike in the volatility index up to, it went up over 60%. I think it closed above 30. So yesterday we saw a remarkable amount of turmoil focused around gyrations in these heavily shorted stocks, and it's quite an interesting thing to witness and watch. But I will add, as a final thought to this, before you got questions about it, that while the Dow was down 2% yesterday, the price of gold was down less than 0.6%. And today gold is up pretty nicely. Silver was up big on this morning. It looks good. So gold and silver are actually still trading less volatile than the stock market, and going up better at times, which is something that they've both been doing since March, and I think is going to simply continue as we go forward in the markets now.
Now, we've seen this kind of short mania before. Remember Hertz Rent-A-Car? They said that we're going under, and the next day people were buying their stock like crazy. Why do people want to bid on something that's going to disappear?
Well, I think it's two reasons. One, they don't care if it's going to disappear. They're just trying to day trade, jump in and out, and they're looking for potential trade setups. I mean, if they're sophisticated hedge funds, and really, we don't know who is behind this Reddit message board. I mean, there's a lot of talk in the news in the United States. This is like becoming one of the key stories in the 24-hour news cycle today, that, this is a story of the small trader against Wall Street, Reddit message board people versus hedge funds, and they, and so forth. But we don't know who's behind the Reddit message board. That could be a hedge fund or a billionaire or a millionaire, that's creating a following. We don't know. But the other reason, to better answer your question, is that, look, a lot of people in this market have no idea what they're doing. They don't know these companies are going to disappear. They don't know the fundamentals. All they see is the movement of the stock price. And millions of people got into trading for the very first time through phone apps, such as the popular Robinhood app. And as we're speaking, this stock, out of the top 100 stocks most owned by people in Robinhood, it's in the top 30. And these people tend to just chase whatever is on this list and moving up the list, and whatever stocks are moving up the most. And younger people that are on these apps, they do go on these message boards like Reddit and Discord to share ideas, and it turns into a bit of a herd mentality. Because, I would suggest to the listener not to open up an account with Robinhood, but to download the app and see what information is on there, and you'll experience or get an idea of what the Robinhood trader is looking at, and the limited amount of information that they're using. They are reacting to pure price. So when you have that mentality, fundamentals mean absolutely nothing.
I was going to say, it's like going to the racetrack, and there's the people who will bet on a horse because they like the color of the jersey worn by the jockey, and then there's the other guy who has, 15 different racing forms and trying to make an informed decision on their bets. And the odds of the guy winning who just bets on the color of the jersey worn by the jockey, so often they win big, and the guy with all the information doesn't. So right now, it looks like that's what these people are doing. They're just going, well, that's a nice, pretty color. I think I'll put a lot of money on it.
That's a really good comparison, because from my own experience in the financial markets and horse betting, which is, I started trading in the late 90s, and I started out as a day trader. Not much different than the type of people we're talking. talking about Robinhood today, and I was successful at it, and I ended up having a small hedge fund. We had a couple $1 million in it, and I did different things over the years. I made money in 2008 by shorting the market, and I thought I was very smart until, and the reason I thought that is because I never lost any money. You know, I saw the market crash and I made money, but then, a year came, I think it was 2014, and I finally lost. I lost like 30% of my money in 90 days. And that was a humbling experience. And I decided one of the things I did is I thought, you know, the mistake I made that caused me to take that loss was I put 100% of my money, on one trend. And what I need to do is never do that again, which I never have, but it made me want to learn about betting. Is there a mathematical system, you know, that about how you could size your bet and so forth. I thought, okay, I'm going to go read some books about sports betting and horse track betting, because, you know, I've been in casinos and I'm not really into those two types of betting, but I've liked to play poker over the years. I'm, you know, familiar with what it's like to be in a casino. And from what I've been told by different people is that the most sophisticated gamblers in the casino is actually horse betting people that do exactly what you said. They are analyzing the information about the various horses. They can get information about the horses from contacts on the racetrack and so forth. So what I decided to do is I wanted to meet a horse betting expert, because I thought if I could meet one of these people, they might be able to teach me something that I could then apply to my investing and trading. So I went and read like 3 or 4 horse betting books, went to a casino and hung out in the track area, in the betting area for 2 days. And what I discovered was that all the people I saw in there and spoke with the first day, none of them were doing any analysis at all. All these people were doing was making these wild bets where you could bet like a couple bucks and hopefully make 1,000 or a couple hundred. They're, you know, doing parlays and really complicated things. Let's bet on the exact order of 5 horses coming in, you know, the finish line. You know, what are the odds of hitting that? It's very low, but if you hit it, it's like a lottery ticket. So people were doing these type of things, and it took me hours and hours and hours to finally meet somebody that was doing the type of analysis that you suggested, where they're really doing a careful study to really be able to pick out a winner without pure guessing. So the point is that it's very few people at the horse track doing real analysis, and very few people in the financial markets. And I think that's just the nature of things, because you can get lucky and make money in the markets. You can make money without doing a lot of sophisticated analysis, actually. In a lot of time, you don't have to do massive study, but that's only if you're using very simple strategies. So for example, dumping half your money in a mutual fund and half your money in bonds, or better yet, in something now safer than bonds, such as diversification in various markets, including a gold and silver position. That's a simple thing, right? And if you rebalance that, if you do something that one author called permanent portfolio investing, where you would dump your money into 5, I think he had 4 or 5 things and never really change it, you're almost certain to come out ahead without having to do much complicated thinking at all. But the opposite is if you're day trading and doing the short-term trading, you really are competing against computer robots and people doing extremely sophisticated things. So the more difficult the type of trading or betting you are doing, the harder it actually is to make money, the more sophisticated you have to be. And when you are winning at that sort of thing, it usually is an illusion that ends up blowing up in people's face. So that is essentially the fear. And, when I talk about these Robinhood people, that's what I worry about, ultimately will happen, because something like GameStop or AMC Theaters, the price, that these things are at is no way justified by the valuation. And anyone who buys at today's price, if it can go up for a few hours and they get out, that's more power to them. I'm happy for them. If they can hold for a couple of days and it can go up a couple of days, that's fantastic. Or a week. I'm not predicting that. I have no idea what it's going to do, in the next hour or next week. But if these people are buying thinking this is an investment, that they're in for hell. They're going to get wiped out. And sadly, that's the case for many stocks now in the market, because we have seen a tremendous rally since March. And, the valuations are not justified for many of these stocks. For some it is. There's pockets where I do think there's a good value in the market, but it's not in GameStop. It's not in, BlackBerry is another one actually that has been going up lately like this, and people just really have to be careful. But when I look at this list of top 100 Robinhood stocks, it's now littered by these kind of stocks that frankly are pretty scary to me.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mike Swanson. Mike, you were mentioning gold and silver did well when the market was going to hell. Is that the kind of trend you expect to see? It's very traditional, and yet people understand it, yet the millennials, if it's not traded on an iPhone, it's not worth anything.
Yeah, I think it's an important trend that, at the moment, from New Year's to today, gold and silver have not been outperforming the stock market. Both are kind of flat since New Year's. However, they've been outperforming the stock market for the past 3 years. And when the market crashed in March, the S&P fell over 30% and gold fell, I think it was like 12%, and then came back faster than the stock market. So when the stock market has had its declines, gold has pulled back less and gone up more overall. Actually, gold's gone up more overall than the Dow since the year 2000. But I think this is going to continue going forward, even at an accelerated rate, because of the fact that interest rates are zero. So the bond market no longer really functions as a great vehicle for diversification or investment purposes. And the U.S. dollar, to me, looks like it's in a bear market. It's trading below its 200-day moving average, which will help gold in the long run. So I'm very bullish on gold, silver too, for the next decade or so, and do think they'll outperform the stock market. But it's not simply that they're not, jumping up on the app to get people's attention, but they haven't been outperforming the stock market for the past 3 weeks. And people in the market who are the most active traders have such a very short-term time attention span that they really only pay attention to what's happening today or the trends that have been the strongest over the past couple of weeks. So at the moment, they're completely seemingly ignorant of what's going on of gold and silver. So, for example, I'll reference this Robinhood list. Gold and silver ETFs or stocks are not in the top 100 list at all. Not a single ETF or stock is in it that's gold or silver related. To me, that's a lot of opportunity because if I'm someone who likes to hold things for months, if not years, and the best way to do that is get in something early when it doesn't look like many other people are involved in it. And there is big money in gold and silver. The money flows have increased a lot over the past year in particular, but it's not the case of individual investors. And if one thing, the rise in these short squeeze plays this week does show that the individual investor, when they do get involved, they do drive things up. We saw that also with marijuana stocks a couple times the past couple years. We also saw that with Bitcoin and cryptocurrencies in general in 2017 during that run. And to me, what we're seeing in the short squeeze stocks now is very similar to what happened with crypto in 2017. And I did a look before your show at the Google Trends search information data, and it goes back to 2004, and it shows that there's 4 times as many people now, or has been over the past 6 months, that have been typing in the term search stock trading on Google search than ever before, while there's 1/4 fewer people typing in Bitcoin than there were at Bitcoin's peak in 2017. So there's a lot less individual investor interest or individual trader interest now than it was in cryptocurrencies a couple years ago when they peaked out, but 4 times as much interest in the act of stock trading. So there is what I thought I would never see again in my lifetime, because I was started out in a true stock trading mania. We're seeing a mania now in it, perhaps in some ways even bigger than the one I was in, because one of the fascinating things I just am seeing, as we're talking, is this Reddit message board has 4.8 million members of it, and there are message boards when I was trading, but I don't think any of them were of that size. I mean, it's absolutely an incredible thing.
More likely 4 guys who lived in their mother's basement.
Yeah. For sure.
And I think, Mike, it was you who pointed out, going back to the gambling analogies, is that people who would go to race tracks or to the casino can't do that right now because of all the lockdowns. So they're playing the stock market like they're horses, or they're pulling the lever on a slot machine.
I think so. And in particular, I think, in a way, this rise of new traders coming into the market on these apps, it really did start in March and April in particular of last year, when the lockdowns, the shutdowns happened. And, a lot of people were entering using the stimulus money, using that to fund their brokerage accounts. But I think a lot of it also had to do with the fact that sports weren't on television. The NBA shut down, and then all the other leagues shut down. So all the sports gamblers that do, bet on using apps, they just moved to stocks instead. In fact, one of the biggest sports betting websites, Barstool Sports, the leader and figurehead of that website, did exactly that. He jumped from betting on sports to betting on stocks and attracted a mass following by doing so.
We'll have more with Mike Swanson right after this.
value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, California has a population of about 38 million. Apparently, they only get enough rainfall to support 3 million people. Now, California water futures are going to be traded on the Chicago Mercantile Exchange. Is that the evolution of water and what it means to people? It's now a commodity.
Wow. Yeah. Well, I think that's the evolution of capitalism in general. Just to find a way to profit off everything. I'm not saying that's good or bad. I'm just stating that as a fact. And another example is dating. Okay, when I was younger, you'd go to the bar and meet women, and now they do it on. Now you go to a bar, these young people aren't there, and they're all, I guess, meeting each other on apps. But what's happening, or one way to look at that is that something that these people used to do for free, go to the bar and find and talk with members of the opposite sex, they now are doing on their phone with an intermediary that's making profit off of it. And Facebook is another example of this, where whenever you communicate with someone on Facebook, you're doing it through an intermediary company. We're talking now through an app too. That's if we were talking to a person, it would be completely free, but there's a small, very microscopic charge that the company is making off of our conversation.
Yeah, I can see people hoarding bottles of water saying, this thing was worth 25 cents yesterday on the exchange, but I held on to it. Now it's worth $1.50. Time to sell my bottles of water. Except you'd be buying them in bulk.
Yeah. Well, look at, last year we saw something absolutely amazing. The price of oil went negative on the futures market briefly, in the spring, so there can be strange, consequences in the market. Strange things could happen in the markets that have consequences in the real world. And the reverse, of course, happens. So it's a funny feedback loop that can happen from time to time.
Mike, I know you like to look at obscure areas that perhaps other people aren't looking at because you want to buy it at a very affordable price and watch it grow. Anything that's caught your interest lately?
Well, last year for a couple years, the two markets I was most interested in and looking for a bottom or time to buy were the agriculture commodities and then the nation of Turkey. And the agriculture commodities, they appear to have put in a secular low last spring. So I think they're in a bull market now that will last a long time. And it took 2 years for Turkey to do the same thing, and they appear to now have put in a final bottom last October. And I own the TUR ETF that, tracks the Turkish stock market, and it went from 17, the low of October, all the way up to 28 recently. But at the moment, there isn't anything like in particular that I'm looking for, to make a massive, bear market type bottom and then just go up. 'Cause it looks to me like almost everything in the market has put in a bottom around all over the world. So it's more just a question of, did that bottom start in 2009, which was the case for the U.S. stock market, or did it start a couple months ago, which I think was the case for agriculture commodities in the country of Turkey. So to give you a newer idea, I guess, it would be, if you look inside the U.S. stock market for individual sectors, one that I've just bought into towards the very end of last year is the real estate investment trust sector, because it crashed last March and then rebounded into June and then basically went nowhere, and just now in the past couple days is going through its high of June and it retested that high in November. So I think that one has some upside to it. And there's a lot of stocks inside of it that, are paying pretty big dividends. Of course, you're looking at real estate investment trusts of real estate companies that own empty shopping malls and empty office buildings, and things like that across the country, but they're getting bailouts and able to maintain the dividend. And, I do think in time, they'll be back to normal operations. But it's also a bet on real estate prices in the United States. And despite what happened in the economy, real estate prices went up 10% last year. And I think they're going to keep going up, because the Fed has interest rates at 0. They say they have there's no sign they're going to raise them. So that makes it so if someone buys real estate, they can do it on very cheap financing. And then also I think we're going to be facing inflation, starting this year, an increase in it. I think that's one reason commodities in general in gold and silver will do well, but I think real estate will do well. And, the best ways to invest in real estate is take out a loan and buy something. I personally don't want to do that. It takes more work than I want to do, and I don't want to borrow money. The other way to do it is to buy real estate investment trusts, because they tend to be closely correlated with the value of real estate. So I think real estate's poised to do well because of rates being low and because of inflation over the next 10 years. And, it's sort of a sick environment we're in the United States, because, I recommend real estate or think of it as a good investment. And yet at the same time, this morning we got the fourth quarter GDP numbers, which show that the economy grew by 4% in the fourth quarter after a 33% rebound in the third quarter. So the growth has petered out. But if you dig deep into the numbers, even during that huge 33% rebound in the third quarter, incomes in the United States shrunk. Disposable income shrunk. So people are suffering. The economy for the average person is not good, despite the growth numbers in GDP that we saw in the second half of last year. So, we're in a bizarre economy. And really, if it wasn't for the government stimulus, it would be a complete and total economic collapse.
Mike, thank you so much for chatting with us.
Thank you. Good talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.